is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello, and welcome back to another episode of DeFi Decoded. I am Alex Tapscott, here with Andrew Young. Last week, we spoke to James Seyffert, who is the senior Bloomberg intelligence analyst covering the ETF space, along with his partner, Eric Balkunas. And he was describing to us basically how the launch of the Bitcoin ETFs has smashed almost every single record that there is when it comes to ETF launches. And in fact, the day before we recorded this, Bitcoin ETFs have recorded their highest volume day ever. So it seems as if the momentum around Bitcoin and the ETF side of things is not abating. But now there's something else going on here. And that's that the entire market is starting to participate in this rally. And just this past week, it's now Tuesday, February 27th, as we're recording this, we have seen a number of names really start to take off. Andrew, Bitcoin's gone from like $51,000, $52,000 to like $57,000 in the past little while. I think probably the ETF narrative is the main driver, though I'm very curious to hear what you have to say on other factors. But we're also just starting to see market breadth pick up. Now, this is something I think we've talked about before in the past, where like the longer rally goes on, the more likely it is that other names begin to participate in it. And it's a sign that there's renewed interest in this ecosystem and obviously in the underlying assets. So number go up, I guess, is the theme of this episode, or at least the first segment of this episode. AY, what's your view?
Yeah, well, hopefully everyone that watches this podcast owns some crypto, either spot or through ETFs with your company or whoever. Because I would say like right now, crypto is pretty euphoric. Just I would say across the board, just because crypto's essentially been going up in a straight line, and we're now almost 4x higher than where we were at the bottom of really like 14 months ago.
And when you say that, what are you referring to? Like market cap of the whole space, or specific names you have in mind? Because I don't think not everything's up 4x, right?
Yeah, I guess it's probably more like 3 and a bit x, right? So for Bitcoin, we're at 57,000. That's crazy. When I checked last night, we were at 52. So 57,000, right? And during the low of FTX, we were at 15. We briefly hit 15. So, nearing 4x the market cap, I guess, for Bitcoin. So yeah, I mean, that's obviously good. I guess 3x return, I should say. And so Bitcoin and Ethereum obviously just ripping. We're starting to see ETH outperform a lot after both Bitcoin and Solana have been outperforming ETH up until, let's say, the last 2-3 weeks. We're definitely seeing a bit of a revenge rally in ETH, which I think we sort of called that on the podcast about a month ago, saying that ETH looked very, very undervalued relative to the sort of other coins. So happy to see that happening. I think ETH right now continues to be probably one of the most obvious plays in the market, just given that, we had James on the podcast last week. I follow the space quite a bit. I was kind of shocked by his bullishness on the Ethereum ETF. This literally by this May, we could have an Ethereum ETF approved, which is the market, I don't think, is remotely pricing that in. So that's really, 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 really good. I think there's 2 other factors that, we've been calling this like the three horsemen of catalysts for crypto in Q1 for the last, I think, since the summer, right? So the last 6-9 months. The first one has played out perfectly, which is obviously the Bitcoin ETF. Bitcoin has rallied super strongly into the Bitcoin ETF, and we're now like a month or so away from that, and it just continues to rally. The second, obviously, is the end of the rate hiking cycle. That actually hasn't played out as much as we thought, which is, in some ways, it's good. We're not just overloading all the catalysts in one quarter, but that's increasingly looking like
Well, I think it's probably true that the rate hiking cycle is over, but the rate cutting cycle, which everyone was anticipating, is being delayed. right?
Yes, exactly. So the rate cutting cycle, which actually in some ways is good, like I said, because I think that's going to again, we're not macro guys, but looks probably more like summer or fall, just based on like how inflation's been relatively sticky and just kind of like market sentiment. But then and then finally we have the only catalyst that was truly pre-programmed in of the three, which is the Bitcoin halving. And that is scheduled for roughly April 20th. So less than 2 months away now. And that has historically been the main, like I guess, one of the main catalysts for new bull market. So, I mean, at least on Bitcoin, I'm extremely bullish. I'm extremely bullish on Ether right now too, obviously, because we have the ETF coming there. And we can also we can talk a little bit about DeFi as well, because there's been some news there. But yeah, I'm kind of curious your take on the market. I think I wouldn't be surprised if we're sort of ready for maybe like it does seem, I guess on a short-term basis, it does seem like we're fully euphoric right now in terms of like crypto sentiment. It does seem crazy that to me, it's, I guess the thing is though, with crypto, you have to keep in mind is there's so much reflexivity in the market. So as the price goes higher, especially for Bitcoin, because there's no real like fundamental basis to it, it effectively leads to more and more excitement. And one thing is we're less than 20% away now from a new all-time high in Bitcoin. And as soon as we hit all-time highs, we start getting massive news coverage about how Bitcoin's hit a new all-time high. Like that's one of the things I always remember about, I guess this is now my third bull market. The other two bull markets is every time Bitcoin hits a new high, you just get like a wave of news. So that's kind of when like FOMO truly starts. So for right now, it's mostly euphoric within the crypto sphere. And my best gauge for that is Coinbase, the app, is still, I think, ranked like 400th on the App Store. Whereas when we're sort of peak euphoria across society, Coinbase typically hits, number 1 or number 2 on the App Store. That historically has been kind of like the top sign. So I would say right now it's relatively contained, at least the euphoria, to sort of the existing crypto community. It's going to be interesting to see if we sort of pause here or maybe take a bit of a pause, or even a small correction from here, or if we just continue to blast through to new all-time highs, especially because we're getting really close.
I have no idea, but I can say that all the catalysts you described are still intact and still in play. And I think that's sort of the interesting thing. Like this ETF is not a one and done. I mean, every single day there's a new bunch of information that hits the market that makes the thesis more compelling, frankly. We saw, as I mentioned in the opening remarks, that volumes hit an all-time high on, I believe it was Monday of this week. And then previously to that, we saw IBIT hitting $7 billion. That's the BlackRock ETF, which is just absurd for the first month for one single product to gather $7 billion. Last week we heard from James about how the launch of IBIT and the Fidelity ETF together would be 2 of the top 10 ranked ETF launches of all time. And if you take the Bitcoin ETF products as a one single launch, it would have been the biggest of all time. I mean, all of these things continue to hit the tape. And this news is going to keep going. And to your point, there is a lot of reflexivity, especially to ETF flows too. I think the more news we hear about flows, the more flows are going to beget more flows, I think. And eventually that's going to turn around because it can't go on forever. But I don't think we're near the end of that yet. But as you said, like anything can happen in this market. When it comes to the rate hiking cycle, I'm of the view basically that this tech risk-on trade that is happening in the broader equity market as a result of NVIDIA's success and just the general euphoria around AI is causing the stock market, and specifically the tech end of the stock market, to just push through all of this rate cutting, rate hiking noise. I mean, if you look at all the major banks, they have all pushed out their expectations for when rate cuts are going to begin. Goldman Sachs was a holdout, and they recently just changed their tune. So universally, all the macro analysts are now more hawkish, basically, on the rate environment than they were 6 months ago. And in that same period of time, we've seen the stock market hitting all-time highs. What is it being driven by? Largely the Magnificent Seven. Those are all tech stocks. And I think, frankly, like crypto assets and Bitcoin in particular is part of the technology basket, right? The two themes that seem to be emerging this year are AI and digital assets or crypto. Fortunately, our fund, the Innovators Web3 Innovators Fund, contains exposure to both. But it's just one of those things where I think the two are now kind of interlinked. And now that macro thesis, to your point, it's almost like an arrow in the quiver. We've seen some mixed data on the econ front and on the inflation front. Generally, it seems to be going the way people want it to, which means moderating inflation and the potential for rate cuts. But it's by no means happening in the near term. And so that kind of means, like, I don't know, maybe in the tail end of this year, as this rally is getting long in the tooth, central banks start cutting rates and it gets another boost, right? So I think that's still very much in play. Maybe it's just been pushed down the road. And then on the halving situation, I mean, I don't know what to make of it, because it's priced in, or it should be priced in the sense that this information is like known to the world, and it has been forever. It's like literally programmed into the blockchain.
But so was the Bitcoin ETF, right? Like the Bitcoin ETF's the news has been live for a month and a half.
I guess the difference, but let me push back on that, because the difference with the ETF is that people were unsure of what the quantum of interest was going to be with the ETF. Whereas with the Bitcoin halving, like, we know not only that the halving will happen, that it'll happen around a certain date, but that also the reward will be the block reward will be cut in half. And then, like, these things are the things that are known. It's not like the block reward will be cut by 80% or something and improve the stock to flow or whatever metric people are looking at. Like, we know in advance what the specific outcomes of this are going to be mathematically. And yet, it's from a just purely reflexivity standpoint, it is one of those things that, like, the more people talk about the halving, the more people start to buy in advance, the higher the price goes, the more it becomes like a self-fulfilling prophecy. And I do believe that psychological push and pull is very much key to the whole thesis around the halving. Another thing that I'm looking at, because I do look a lot at the equities, is how some of these miners, not all of them are doing well, but I think some of the ones that are not doing well is because of company-specific reasons. But look, like when Bitcoin went up a lot yesterday, Marathon and some of these other names went up a lot. Like Marathon Digital was up 20%. Coinbase was up 16%, which is crazy. Like Coinbase is up 16%, and yet it wasn't the best performing company with exposure to this asset class. But the economics for Bitcoin mining are going to become more challenging as a result of the halving, right? So it's weird that a price rally, which may be driven in part by this upcoming event, is helping to push the value of miners higher, even though they might actually suffer in some form as a result of this. And just so people understand what I mean by that, miners are all competing for the same block reward. The hash rate, which is a measure of network security and computing power and energy required to mine, is going up. And so basically what it means is people are using the same amount of energy, the same equipment, the same cost for less of a reward, right? So it just means that, like, the economic upside for miners is going to be smaller, and there's going to be a smaller pie, and everyone's going to be fighting over it just as fiercely. So to me, it's sort of an odd thing where maybe the market is telling us, I don't want to give equity investors too much credit here, but maybe they're saying, well, at 100K Bitcoin, none of this matters, right? Like 100K Bitcoin, the block reward is double what it is today because the price is higher, and maybe the hash rate doesn't keep up. So basically the thesis would be maybe the miners are telling you to anticipate a much higher Bitcoin price because they're acting the way they are, right? So I don't know exactly. They do have operational leverage to the price of Bitcoin, So if you produce at $50,000 per Bitcoin and the price goes from 51 to 55, your margin goes up by 400%, right? So you're making $1,000 and now you're making $5,000 per Bitcoin that gets mined. So they do have that leverage, but something tells me that they're pricing in a value that's a lot higher than that. So that's another thing that I'm looking at right now as well.
Yeah, sorry, and just to cut you off real quick, what do you think of MicroStrategy? So MicroStrategy is essentially like an enterprise. I guess we haven't really talked about MicroStrategy on the pod. MicroStrategy is a U.S. enterprise software company that has taken their entire balance sheet and bought Bitcoin with it, and then also taking out tons of debt against their relatively stable, SaaS business to buy more Bitcoin. And its stock is just going crazy. It's actually up 10% today.
Yeah.
It looks like it's up 50% in the last 2 weeks. It's up 71% this month. The reason why I bring it up is just because it's always been kind of the proxy for buying Bitcoin, at least the last 3-4 years, before the Bitcoin ETF kind of came out. And a lot of people thought it would suffer when the Bitcoin ETF came out because now you can just buy a Bitcoin ETF instead of buying indirectly through MicroStrategy. But I think since then, MicroStrategy has actually outperformed Bitcoin. I'm just kind of curious, you're talking about the Bitcoin miners. Curious, do you have any thoughts on MicroStrategy?
I don't have enough information to have a really well-informed view. I think that probably there was some questions about whether a company that most of its value comes from the Bitcoin it holds on its balance sheet will continue to be attractive when there is a Bitcoin ETF that you can buy. And people might say well, maybe one's better than the other. Well, what makes an ETF attractive is that it's highly liquid. It has very tight spreads, right? So the difference between the bid and the ask is very narrow. And it trades close to or at net asset value. Because what you really want to be doing when you're buying a Bitcoin ETF is getting exposure to the price of Bitcoin. You don't necessarily want to be buying it at a 2% discount so that it might go to a 2% premium. You kind of just want it to stay where it is. Now, a lot of these other proxy companies that give exposure to the asset class might be interesting for reasons like Coinbase. So, this is an exchange, and, if the asset class does well, more people will come back to the platform. They've got the capacity to grow a lot, and so that's really interesting. Or a miner, the price goes up, the operating leverage, as I described it, the margins can increase. With MicroStrategy, I just don't know enough. But my understanding was always that if you kind of backed out the Bitcoin, it was trading at a kind of a premium to its net asset value. I don't know if that's still the case. So I think maybe this is just a signal that the market is looking for proxies, because there's still a dearth of ways to get exposure to the asset class beyond the ETF. And my thesis from a month and a half ago, where I said that many crypto equities would suffer as a result of this ETF, perhaps I was wrong, right? Maybe this is just risk on and it's indiscriminate, and everyone's just really bullish and they'll buy anything that sort of walks and talks and quacks like a duck, right? So I don't know. Yeah. I think that there's part of this is just that retail FOMO that's happening in the market.
Yeah, and one thing on MicroStrategy is it's not a pure play Bitcoin, because there is the financial flexibility that they have to sort of bottom buy the bottom on Bitcoin, which is really what they did throughout the whole bear market.
Yeah,
which people thought was crazy, but I think their average purchase price on Bitcoin was $31,000. So up until about 3 months ago, they were actually underwater on their Bitcoin purchases, and now they're effectively up 100%, or I think it's 70%. They actually own 1% of all Bitcoin now, which is just insane. And I think they're also rebranding to a Bitcoin company as well. So which is kind of interesting.
Yeah.
To answer your question, though, I totally agree. I would have thought they would have taken a little bit of a hit as well, and same with sort of Coinbase. But just because I feel like a lot of us sort of assumed that they were effectively a proxy play for crypto exposure. But if anything, they seem to be outperforming, just because people are so excited about crypto, and in some ways, Coinbase and MicroStrategy have a higher beta to crypto than say just Bitcoin itself, which is kind of the biggest large cap. So it's interesting.
Yeah.
Yeah.
Well, I was going to say, now looking at the rest of the market, everyone's now wondering, okay, well, what have we talked about today? We've talked about the ETF, the halving, the rate hiking cycle. These are things that I think most people associate with Bitcoin, right? The ETF is Bitcoin, the halving is Bitcoin. The rate hiking cycle, well, if Bitcoin is a sort of a macro asset, a risk-on asset, acts as a proxy, then rate cuts should lead to that asset, maybe performing a little bit better. So how do we then account for the rest of the market? Well, with ETH, you pointed out this ETF potential. We should say it's not a done deal yet, but there is a deadline coming up in April for BlackRock's filing. James from Bloomberg provided some great sort of tidbits on what to expect. Basically, no news is bad news in the lead up. And if there's any kind of input or back and forth with the regulator because of the filing, then that's a positive signal. But his view is basically this is a matter of when and not if. If it's not April, May, then it's probably going to be like a year or two down the road. So maybe that's what's pushing ETH. And then what about the rest of the market? Like, you could make the case that, well, it's risk on, and so people are just buying everything, right? They're buying miners, they're buying MicroStrategy, they're buying Bitcoin, they're buying Solana, they're buying BNB, whatever. But then again, there's also some specific sort of trends that at least I've identified. I know you have too. So one of them, there's a project called Stacks, and this is not like a recommendation, but it's a Bitcoin L2, so basically smart contracting platform on Bitcoin. This is an interesting trend that has really picked up since I'd say about a year ago. Remember we had Farmer Joe on the show a year ago. He's the guy who does like a lot of the ordinal trading, and that was the NFT projects on Bitcoin. And that was a very early signal that, hey, maybe this Bitcoin network might actually be useful for something other than securing this network of assets, this payment network, this asset network. Maybe it could be used to launch other assets, do smart contracts, launch applications, and so forth. And more recently, that's really been a theme that I think has picked up. Now, it's caused some divisions within the community. People think basically like, that this is crowding out block space for other more worthy Bitcoin transactions. But the reality is like there's clearly like a Bitcoin L2 kind of thesis going on. So this thing has done really well. Another thing that we've seen is old school DeFi.
Yeah. Sorry. Before we get into the old school DeFi, because I want to talk about that for sure. But one project actually. So I've actually been. I would say I've been sort of on the. I would say fading / not as excited about the whole kind of like Bitcoin L2. Angle, but I'm starting to change my mind a little bit on it, especially because I'm seeing a lot of really, really high quality teams getting major funding to build out this like effectively, like you said, like L2 infrastructure for Bitcoin. Yeah, it's been interesting to see the ordinals explosion as well. And I was actually just looking at a project yesterday called Build on Bitcoin, Bob for short. Which is building a roll up on Bitcoin. So like an optimistic roll up. So this is the same sort of like L2 infrastructure that some of the biggest projects in Ethereum use, like Arbitrum and Optimism. And it's actually going to be fully EVM compatible as well. So projects like SX or anyone who's currently built on Ethereum could actually deploy on this effectively Bitcoin L2. So it's pretty interesting. I mean, I didn't realize that like those types of projects were being built out. That's kind of like a marriage of Bitcoin and Ethereum, and could be huge. I mean, Bitcoin's obviously got the biggest market cap, in the world for crypto, and there's a lot of really cool things you could do. You could have like MakerDAO, but being backed by Bitcoin, like native Bitcoin, like stuff like that. It's really, really cool. So. It looks like a lot of these projects are slated to launch in sort of like the second half of this year. But yeah, I mean, it's pretty cool to see. I mean, it's still sort of TBD, but it does seem like there's a lot of energy and a lot of funding going towards exactly like you said, building out like essentially Bitcoin DeFi and sort of Bitcoin L2.
Yeah, well, what I think is enticing from like an investment trader standpoint is a lot of people will say, there's like the fat protocol thesis, which is like, well, how valuable is the underlying protocol versus the applications built on top? And this whole thing was like in the internet era, all the protocols were public utilities and they were really thin, and then all the companies captured all the value. So, the internet is not a monetized corporation or thing you can own, but Amazon is or Google is or something like that. And then with Web3, the platforms themselves, the protocols like Ethereum are really fat, and the applications and the assets on top can be very valuable. But I don't think at any point in time were DeFi assets ever, like the governance tokens, the token value of projects like say Aave or Uniswap, like collectively ever close to as big as Ethereum. So that's sort of an argument in favor of that. I guess this is sort of like, lizard brain, but Bitcoin is $1 trillion market cap. The value of things that are sort of built on top can get to hundreds of millions of dollars in collective value and still sort of be viewed as like thin application layers because the value of the platform is already so significant, right? I don't know. I can just see that coming up at some point as like a thing. It's like, look, like whatever XYZ thing is only worth $5 billion versus Bitcoin at $1 trillion. And, that's, 0.5%. And if you look at during the peak of the bull market last time, Uniswap was 10% or something like that. Like I can just see it being an argument that people use. So something to maybe keep an eye on. So speaking of DeFi, let's talk about old school DeFi because you're an old school DeFi guy. I mean, this podcast is called DeFi Decoded. We only talk about DeFi like maybe 20% of the time, but some of these old darlings are starting to show some signs of life, like Uniswap. They did something last week and the token went up by 50%. Can you explain what the heck's going on here?
Yeah, so it was really big news. It's been one of these things that people have been eyeing for a long time. Uniswap currently is the largest decentralized exchange by far. It has about a 55 to 60% market share of total volume. But as of right now, the token effectively has very little utility. It's just, like all you can use the token for is to essentially vote on governance matters. Yeah. It has no value accrual, and so the reason why the big news of the week was someone who works at Uniswap Labs, which is kind of like the dev co behind the Uniswap protocol. They put forward a proposal to, it's just a governance proposal, so it still has to be sort of discussed and voted on, but they put out a governance proposal to add a fee into Uniswap, which would then which would go directly to essentially Uniswap holders. It's actually a little bit more indirect. You would have to participate in governance to get the fee, but still, essentially sharing revenue that the protocol generates with Uniswap holders, even if it's a little bit indirect. And so the fee, like, there's a lot of different ways like this fee could look like. It's probably going to end up being some percentage of the revenue that Uniswap LPs, so these are the people providing capital to Uniswap so that people can trade against, it'll be some percentage of that. Some people are saying like roughly, call it 20%. So essentially for every dollar of fees that the supply side of Uniswap generates, the token holders would get 20 cents. The biggest reason why the token's up a huge amount, I actually don't think it's due to the fees. I think it's more due to the signaling. So the amount of fees that Uniswap will generate from this is actually, like, it's significant, but relative to its market cap, it's somewhat insignificant. It's kind of in like the $50 to $100 million range. Let me just check real quick. Uniswap is a $10 billion, actually $11 billion protocol. So $50 to $100 million is not, even if you were to pay out 100% of 100 million, that's, point up like a 1% yield. Uniswap trades, the daily vol is like 5 to 7%. So one of the stories, the dividend is not, the staking yield is not itself a huge driver of the value accrual. To me, it's the signaling that the Uniswap token is finally looking at actually generating value accrual in the first place. And the reason why that signaling is so big is up until now, the Uniswap team, like essentially Uniswap Labs, has been dead fast against any value accrual for the token. So it became this kind of like almost like a meme within crypto that Uniswap, the Uniswap token was essentially completely untethered to the value that's created on Uniswap. And so the fact that there's sort of like a shift in the core team is open to a shift on there, which is something, again, the community's been asking for a long, long time. Just that signaling alone is worth a ton. And not to add conspiracy theories to this, because one of the reasons why the core team has been dead fast against adding fees, or like I should say value accrual to the token, is that they didn't want Uniswap token to be considered a security. And having any sort of actual utility added to the token in some respects makes the token more security-like. It also just makes it more valuable, obviously. And so there's sort of a rumor going around that this might be due to the fact that Coinbase is potentially going to win their court case against the SEC. Like essentially, there's rumors going around that, and again, the rumors came from because I think the chief compliance officer of Coinbase put out this somewhat cryptic tweet saying, "Hey, like don't front run good legal news. Like that's our news to share." And so that combined with this sort of clear shift in direction from the Uniswap team. Uniswap is, I think, one of the main holdings of Coinbase's venture portfolio. Sort of is creating this, again, rumor within crypto Twitter that potentially the SEC has lost or has suffered a bit of a setback in their court decision or the court case against Coinbase. Again, that's just a rumor. Either way, I think just showing that you're willing to be open to value accrual to the token and actually paying for governance, whereas right now Uniswap holders effectively participate in governance for nothing, adds more utility to the token, and also just kind of essentially shows that these old school DeFi governance tokens aren't just effectively a meme coin. There is some tether between the performance of the protocol and, I guess, the utility of the token. And so finally, just to end it off, because I do want to hear your perspective on this too, is what's interesting is these DeFi 1.0 coins. So, projects like Uniswap, Aave, DYDX, there's actually, there's tons. They've actually been the best performer over the last week. So as soon as Uniswap was up 50%, a lot of that value rotated into these other coins. So DeFi 1.0 coins have been vastly outperforming this week after, multiple years of underperformance.
Yeah. Okay. So my take is that if something's super useful and it's the leader in the entire industry, it's clearly valuable. So the value was there all along. And now there's just a mechanism to capture some of it for token holders. And I know that sounds sort of silly, but basically it's like, it don't overcomplicate it. I think what we're going to see is a lot of protocols having seen the success here, try to institute some kind of value capture mechanism. And, maybe there's an interesting sort of investment thesis to look at for those who are like deep in the crypto side to say, okay, what are the other widely used apps that have a bad value capture mechanism where the token basically does nothing other than provides a governance tool? And should we buy a basket of those in anticipation? Maybe that's what's happening here, Andrew, with these other DeFi names. I don't know enough about how each of them is designed. Like I can't say, but it seems to me like that's kind of interesting. Number two is like, I think there's a big push always in this industry to like look for the next new thing, like the new thing. But I don't know if you're going to use a protocol where you're tying up assets in a lending pool or on a bonding curve or something. Like you want to know that the thing has been around for a while, right? Like the longer it's been around, the more likely it is to continue to be around, right? That's like, what do they call that? The Lindy effect. And it's like with these DeFi names, I can see them having a huge resurgence because if interest is going to come back into the space and people are really going to start using all these tools for financial utilities as a way to access credit or trade or borrow or whatever, then I can see them like doing amazingly well. And if they can follow the lead of Uniswap's just a proposal that leads to this, then I think that's a pretty good signal, basically. Go ahead.
Oh no, I totally agree. Yeah, I think like one of the just one last thing. I do think the model of going kind of no fee, capturing the market, and then slowly introducing fees later makes a lot of sense. I actually tweeted out. I have some criticism on the Uniswap fee switch. I think because they've also recently added this front end fee onto Uniswap, which just goes straight to the core team, which I'm pretty against. I think like all value think all value accrual should go to the protocol. Like I think sort of taking a fee directly to the core team is sort of a little bit of like a betrayal, I guess. But I think like one thing they should have done though, because I do think this probably, if the fee comes into effect and it's significant enough to actually create a utility for the token, I think that probably marks the top of Uniswap's market share. There's just so many new innovative decentralized exchanges coming out, as well as perp exchanges, which tend to have their own spot exchange attached as well. That makes me think, like in some ways, it's a really good time for Uniswap to turn on value accrual because they have such a dominant position, but it's also a bad time to make their product less competitive, just right as there's more competition coming. I actually think probably what they should have done is actually have zero fee, but launch potentially look into launching their own kind of like L2 or app chain. They easily have enough, TVL, dev mindshare, just overall community size to immediately be one of the biggest L2s in all of Ethereum, and L2s capture a ton of value. And then that way they could actually, and I mean, again, I'm not a decentralized exchange expert, but there's ways you can capture value at the chain level, which then lets you essentially make your like the application more competitive, particularly on like with this thing MEV and all these other things. We don't need to get into it, but I think moral of the story is like if you think about it, Uniswap generates a huge amount of value for Ethereum. I think it's actually probably maybe not number one, but one of the biggest sort of uses of Ethereum block space is people just making trades on Uniswap. And so rather than trying to monetize on the application side itself, they could have theoretically, create their own L2 and monetize at the chain level and sort of capture some of that value that they're creating for Ethereum for themselves. And then that way still have no fees on the app. But again, it's really hard to know. Osmosis and DYDX are effectively trying that right now by building their own Cosmos chains. It's still very early to tell whether that's going to work or not. So we'll see. But I do think that's like one thing they could have explored. And I know there's some of our sort of investors, like guys like Dan from Nascent, for example, have been pretty vocal about having Uniswap build out like a uni chain. So again, we should get Dan on the podcast. By the way, I'll reach out to him. But
you should.
Very interesting. I'm wearing a Nascent T-shirt right here. So
there you go. Well, the space is still nascent, so there's lots of room to go. It's in its naissance, not its renaissance yet. By the way, Jake, our associate here, just chimed in with some data. So Coinbase is currently the number 300 ranked app on the App Store right now, which is the highest level since early Jan. But to put it in perspective, it hit the top 3 of all apps in 2018 to 2021. So it's 300 right now. Search volumes too for Bitcoin and other related terms is still pretty muted. That's been going around Twitter, like everyone likes to look at that. And I think it's just a sign of what we've described as kind of like the silent rally in a way. Like obviously it's very loud in the circles that you and I like interact with, but this is not front page news. It's kind of remarkable. Like last time Bitcoin was at $57,000, people were losing their minds, for better or for worse. And now it's just sort of like a ho-hum thing. Even this ETF news, not that that's like news that most humans care about, but even still, like in the business press, this is a historic landmark event that smashes records daily, and it's not really getting a lot of attention. So I view that actually as a big positive.
Yeah,
to be honest. It's just kind of like humming along here, and like when's the world going to take notice? 60, 70, 80, 100, 200? Like I don't know.
It's completely insane. I actually, when I was watching a Bloomberg section, and the host introduced, because they were talking about how they were talking a little bit about the Bitcoin ETF, and they actually introduced it. They're like, oh well, Bitcoin's at 45K, total far cry from its all-time high of 69K. I'm like, guys, that's almost nothing for Bitcoin. That's like a 1 month move away. You know what I mean? If that. And like he was introducing it as if like Bitcoin was this completely down and under asset. It really sort of reinforces this idea that, to me, which is the mainstream press only starts to notice when it starts making complete all-time new highs. So right when Bitcoin gets to like 70K is when we'll start to see a lot of news, and that's it's also typically that's also the time when everyone who's ever bought Bitcoin is obviously up, and so it's sort of like peak euphoria because everyone who's ever bought Bitcoin is now bragging about it to some extent.
Yeah.
And also for me at least, it's a sign that you were wrong. You know what I mean? Like if you, so like me personally, I saw Bitcoin in 2013. It hit a high of 1,000. Went down. I was kind of like, oh, Bitcoin, whatever. It just that was that, and it collapsed. And then in early 2017, when it hit like 1,500, that's when it forced me personally to sort of reevaluate Bitcoin and go, okay, I was actually wrong completely about Bitcoin. It's clearly not going to zero. Like, I could have bought it and been up. And so I think in a lot of ways, and that only becomes stronger when I went to like 2K and whatever, is when you realize like, okay, I saw this thing, I dismissed it, I thought I was right, and now it's just going way higher. That kind of is a big turning point. I think, at least that was for me, and I think will be for other people, to sort of reevaluate their priors on crypto and Bitcoin. At least from
perhaps to double down on their opposition, which we see also every time it hits an all-time high. But hey, that's what makes the market.
But those people become the least believable when it starts making new all-time highs, right? Like it's easy to be a Bitcoin bear when it's down 80%, but when it's making new all-time highs every day for a couple of months, it's tough for people to really take you that seriously. And again, Bitcoin and Ethereum have so much reflexivity involved, in the sense that like as the price goes up, it directly increases the fundamental value of the asset, and so it's not
it fundamentally increases the price, or does it also fundamentally increase the fundamental value? I mean, I just want to clarify what you mean by that.
Yeah, so I think there's more reflexivity in crypto than there is in a stock. So when Tesla is going up in price, it does have some reflexivity because it effectively gives Tesla a lower and lower cost of capital, which allows them to, hire more people, fund more things like that. And also obviously like increases attention on the stock. But at the end of the day, its earnings are its earnings. The stock price doesn't really impact them directly. The thing with Bitcoin and Ethereum is they're effectively selling block space on a network. And so as the price in US dollars goes up, that block space becomes more and more valuable, or at least more and more expensive. At the same time that the demand for the main use case for that block space, which is effectively speculation, also goes up. And then because these things are open source networks, a huge part of the value prop with these things is how many like outside developers, and how many people are building integrations or apps on top of these chains. And as the price goes up, you just see you almost always see an explosion in developer activity. Yeah. And then you also see obviously more integrations, right? Like Bitcoin's price going up has made it easier to get an ETF approved because there's enough funding behind it to take the SEC to court, right? If Bitcoin was at like $100, Grayscale wouldn't have really fought, I don't think, would have fought as hard to get an ETF approved versus now, even when it was like 10 or 15K. Yeah. It's like 100x increase in the value of trying to win that court case. So again, like there's a lot of, that's what I'm calling about reflexivity, in the sense that like as the price goes up, it has a positive impact on the fundamentals, which in some ways justifies a further increase in the price. There's obviously limits to that, but I guess what I'm trying to say is crypto, I would say, is uniquely subject to reflexivity, both on the way up and then as well on the way down, as we know.
Yes, well, right now we're in one of the good periods, so let's hope it keeps going. We've got a great bunch of guests lined up for the next little while. Builders, investors, regulators, you name it. It's going to be an awesome next month of experts to help sort of share their thoughts and guide us through this very busy and kind of exciting time in the space, Andrew. So yeah, who knows where we'll be next week, but that's it for today's DeFi Decoded. Thanks everyone for joining. That was a lot of fun. Good to dig deep and to engage in a nice little discussion on the global macro and the future of the industry. We will see you next time. Until then, I'm Alex. Take care. Cheers.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.